day, ladies and gentlemen. In this particular video, I'll be teaching you how to determine the next draw on liquidity on your daily time frame. Okay, so basically the rule is very simple. Once you have a body closure in a break, okay, so let's say a candle breaks a level, all right, of a previous candle and it closes beyond that level, that tells you the direction of the market. Okay, so a few examples will make you understand what I'm trying to say. All right, so look at this. I'll start from this candle right here. Let me move this up. Okay, I'll start from this candle right here. Okay, so this is the daily time frame on Euro USD. So I'll mark out the high and the low of that particular candle. So I've marked out the low of that candle. Okay, and then I want to mark out the high of the candle. Let me double this. Okay, so I've marked out the high of that particular candle. And what do you see happening with the next candle? Look at this next candle here. The next candle broke and closed below the low of this particular candle. So the next candle broke and closed below the low. So what you now do is you mark out the high and the low of this candle that just broke and closed beyond the previous candle. Okay, so you mark out its high and its low. This is its low right here, and this is its high right here. So I just marked out the high and the low of that candle that broke and closed below the low of the previous candle. So automatically just know that the next draw on liquidity will be the low of that candle. Okay, because it broke and closed below the low of the previous candle, automatically its own low becomes the next draw on liquidity. So price is going to take its low. Okay, price will never, even if price is going to go to its high later, price will take out the low first. The low is going to be more important for price to take. All right, so let's assume that this was Monday. Okay, this was Monday, and then the break happened on Tuesday. Automatically on Wednesday, the following day or the following days, you should be looking to take a sell trade in order to come and take this low, because there is a 99% assurance that this low is going to be taken before this high. So that's going to give you a bias for the week. It's going to give you an idea of how to take your trade. So what you are looking for, knowing fully well that this low is the priority for price. In fact, 100% price will want to take this low before it takes this high. Okay, and you can see what happened in the following days. Okay, you can see what happened in the following days. The next day, price was unable to push down to this low. The following day again, it did not push, but later within that same week, price smashed that low without touching the high. So what you are going to do is, after you have marked out this high and the low, don't forget this is a daily time frame. As the new day is forming, you go to your lower time frame. It can be maybe H1. Okay, it can be H1. If you are the type that like to break things down more, you can go to M15. Okay, you can go to your 15 minutes time frame. Then you'll be looking for a possible order block within this particular range. It could be another block, it could be a fair value gap, it could be a breaker block. Okay, depending on the PD array that you know and you can find. All right, so you are going to go to a lower time frame to look for that point of interest. Like I said, it can be anything. It can be your breaker block. It can be your mitigation block. It can be anything. It can be a fair value gap that is yet to be mitigated, which price is going to pull into in order to give you that sale. Because you can see when price opened the following day, it moved up to a certain level and then started selling from there. So on a lower time frame, there will be definitely something around that area that is going to push price down, and it will be a PD array. Like I said, one of all those PD arrays: breaker block, order block, etc., mitigation block, etc. Okay, so let's continue. So let's assume that this is the first day that you want to mark out as your range. Okay, marking out the high and the low of that day. I'm trying to give you several examples so that you can also see different scenarios. Marking out the high and the low of that day, you can see that the following day, which is this one, price did not break and close beyond, so you don't have a bias. yet. Okay, on this other day again, price did not break and close beyond. Don't forget that these days are also ranges on their own, so this one also is a range. I can mark out the high and the low of that particular day. Let me mark it out, because I can see that the criteria for you to have a bias was fulfilled after that day. Okay, what do I mean by that? You can see I've marked out the high and the low of this small candle right here. Don't forget, this is a day, this is a full day's candle. Okay, price was probably ranging on the lower time frame, because you can see it did not expand. That's why the daily candle is small like this. Okay, so the following day, what do you see taking place? Price broke and closed below the low of this candle. That gives you a bearish bias. So what will you do? You mark out the high and the low of this new candle. Okay, you mark out the high and the low of this new candle, knowing fully well that as the new day is starting, your bias is bearish. Price will take out this low before ever thinking of taking out this high. So what you do is, as the new day is starting, you look within this previous day to see if there's a PDRA price will pull into in order to give you that sell to take out this low. Okay, and as you can see, when price opened, it pulled into something, then swung lower to take out the low, and it still continued pushing lower from there. Okay, so that's how you get your bias. The only time this is not going to work is when price now decides to reverse. It's only at reversal points, that's when this is not going to work. Okay, only at reversal points. All right, so this will always be respected so long price is not ready to reverse and change direction fully, and this only happens once in a while. Okay, so you would have made your money. Then when such reversals takes place, that's the only time you're going to have a loss. Then it will continue on a new trend which you still follow and make money with this ideology. Okay, so let's mark out this one. Let me mark out this one. Let's assume this was your first day, so let's mark it out. Mark out its high and its low, just to show you that this works. That's why I'm giving you several examples. Mark out the high and the low of this particular candle. Okay, and what do you see happening? The next candle broke and closed below the low of this candle. All right, that tells me that when I mark the high and the low of this new day, I am looking to take a trade to take out the low of that candle. Okay, because I already know that my bias is bearish, since I have a full body close after price broke the low. Okay, so let me mark out the low of that candle. I've marked out the low of that candle and its high. So all I need to do is to look on a lower time frame for an order block, breaker block, mitigation block, whatever block, fair value gap, etc., that I can find inside of this candle that price would most likely move to before taking out this low. Okay, and as you can see, when price opened, it pushed into something and then took out the low, which is very, very predictable. You already know that is the low that is going to take. Okay, so basically that's just how it works. Let me give you maybe one or two more examples. Okay, so you can see right here, you have this high and you have this low. Okay, so price did not take out the high or the low in terms of breaking and closing beyond it. Okay, so basically at that point you can't do anything. Okay, then for this next one, you can see that price broke and closed above it. Okay, so definitely the high of that candle is going to be taken before price comes to take the low, and that's exactly what happened. Price just wicked above that high and then pushed down to take its low, but that high must be taken first. Okay, so basically that's just how this system works. If you have any question, you can ask in the comment section. If you are a new viewer, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks.